everybody. Happy Tuesday. Thank you, Lo-Fi Beats, as always. Hope everybody's having a nice week. So yeah, this call will be perhaps a little bit a little more brief than most, possibly. The reason is we have several core contributors to Tokenomics who are down at the Permissionless Conference right now in Florida, which seems to be a great time. It sounds like despite the price turmoil, it's actually a pretty good vibe down there. If you've ever been to a crypto conference, especially an ETH conference, like I personally have either organized or attended dozens of these things, and I haven't really ever heard people have like price discussions at ETH conferences. Nobody really cares. It's all, the focus is always on building. Of course, like the price stuff is always in the background and of people's minds, and maybe it pops up on the margins, but it's really all about building cool stuff. So I hope everybody that's down there is having a blast. I know there's some good representation of the DAO down there, which is always cool. One of the bigger conferences coming up later this year will be DevCon in Bogota. It's been delayed a couple of years because of COVID, but that should be a fun one too. So yeah, let's kind of jump into it here. So last week, we really kind of had the deep dive presentation in terms of what the bear market really means for the DAO's treasury. Where are we right now? What's our runway? And then, what are our options moving forward? And we spelled out several of those, one of which we'll really cover in detail here today. In terms of where our treasury is right now, we have, and again, this is always, you can see where we're at in an up-to-date fashion on Etherscan, and more importantly, our dashboards. But currently we have 4.3 million in USDC and another 0.3 million in our Olympus bonds that are unclaimed. Pardon me. We did have a little over 200K worth of UST. Of course, that is much less now. I think the peg is down to like 9 cents. It's been as low as maybe 7 or 8 cents. So this kind of speaks to like the importance of having a diversified, stable treasury. It's great to have stable coins, but as we've seen from the collapse of Terra, that doesn't do much if the stable coin itself can just basically go to zero or get slashed by 90%. That said, what happened to Terra isn't exactly like a big surprise. A lot of people were calling for we're saying this could happen for a long time. It, of course, was a question as to whether or not it would lose its peg, but there were some very obvious risks there. That's one of the reasons that we never actively accumulated UST beyond just our validators. Our validators are churning away and doing great work on that, but we never went out of our way to get more Terra or more UST for that reason. But this topic came up during the Treasury call we just had, and it's worth reprising. Every stablecoin has its own set of risks. USDC is a more centralized version. It's like pretty unlikely that USDC is going to unpeg and go to zero anytime soon. The main risk there is that Circle, who runs USDC, could just arbitrarily blacklist DAOs. And like our DAO, there's no reason I think they would do that, but there's a non-zero possibility. So I think there's still room in our treasury for converting some of that USDC to say FEI or FRAX. FEI is a collateralized stablecoin with some algorithmic futures. FRAX is pretty cool. There's some other ones out there too. But yeah, RIP UST indeed. If any of you got wrecked on that, I hope your week is going better this week. It's never fun losing money in crypto, but I think the nice thing market-wise is that all that chaos seems to have worked its way through the broader crypto ecosystem. And then, if you look at the technical levels, we bounced near some important levels on ETH and BTC. I personally think we have a lot further to drop. Unfortunately, it just feels, having been through these cycles, I don't think we're at the bottom. I really hope I'm wrong about that, but we have to plan for the worst. Fox, of course, is near its relative lows, and there's no reason to think that Fox will outperform if the market keeps going lower, because long tail assets always outperform almost always during shitty markets. But that's okay, because we can be proactive and plan. Thanks, Fox McCloud, for sharing that conversation. So yeah, we had Eric on talking about UST and some other stuff on Unchained, which is a freaking great podcast, by the way, with Laura Shin. It looks like he was with Eric Wall, who you guys should follow him on Twitter. He's like 40% kind of snarky and like shit posty, but the other 60% is like really solid insights. So that's good stuff. So yeah, at the end of the day, UST collapsing, it's not going to make or break our treasury. So one thing, and if you can bear with me for a second, I will get this posted. So you guys might recall that one of the options we talked about in order to extend our runway is to incentivize contributors to receive Fox instead of USDC. Right now, you can choose Fox instead of USDC. A minority of contributors choose that option. But the idea is if we issue, or if we have the option of, if contributors have the option of taking more Fox in exchange for a time lock period, in other words, having to wait a certain amount of time before taking the Fox, this would be good for the DAO because we're paying out less USDC and we have ample Fox. Me and Josh have put our heads together a little bit on this initially, and we came up with this initial survey. You can kind of see the results here in the stage chat. So one of the immediate takeaways here, and this is based on 42 responses, but one of the cool things here is there clearly is demand for this sort of thing. People are generally willing to, they're interested in receiving a bonus of Fox in lieu of USDC. So just looking at the two questions, if you were receiving Fox instead of USDC, which one would you be most willing to take? And kind of evenly split here between three of the options, although the most popular one was getting 20% extra Fox in exchange for a 6-month time lock. But the longer term options were popular as well. Which is awesome, because the longer term time lock, that means you're bullish on Fox. That's good for the DAO too, just because that's delaying when Fox hits the market. So it was very encouraging to see that. And then if ShapeShiftDAO offered that an incentive such as one of those options, how much incentivized Fox and USDC would you want to receive? Again, this was pretty split. Only 11% said they're not interested at all. Probably, let's see, over 50% are interested in receiving over 50% or more. So based on this, we're going to kind of be crafting a proposal with some outlining initial terms, potential terms, and then the other important thing we'll need to figure out is by which means will contributors receive this bonus Fox. So how do they opt in? And then we're kind of looking at two options. One is Sablier, which is a streaming service. So some engineering contributors are using this already. Legacy Foxes at centralized ShapeShift, many of them receive a Sablier stream of Fox for their prior work with ShapeShift. Sablier works really well. It's reliable. It also works on Gnosis chain, which is great because Colony, of course, is over on Gnosis chain where our work stream budgeting and transfers happen and all that good stuff. So that's like just really encouraging to see. Hedgie, I'm not quite as familiar with how this might work, although Lindsay from Hedgie's explained it, but I think we're going to dig in a little bit more there. That's another viable option, incorporating some of the NFT stuff and then the ability to time lock. And of course, we're using Hedgie right now, trying to sell some Fox, I think we might have to adjust those parameters. But Hedgie is a great platform that could work as well for this. LPX, you're asking, would locked up Foxy be more feasible? That is an interesting question. Honestly, I haven't put my mind around that aspect yet. So that's definitely one. I'm going to make a note of that. Something worth considering. Yeah, there's like there's a few different ways I could go. So LPX, you're thinking basically the Foxy's locked up, but as the rewards become available, you can claim those at any time. Is that kind of what you're thinking there?
I think maybe it could be like you get that. So let's say you pick the option, the 18 months that gives you 30% extra. And that automatically, like the first thing that happens rather than going into a Sablier stream is you deposit it into Foxy, so you get Foxy with it, and then you put the Foxy into the Sablier stream.
Yeah, that's interesting. So logistically, like, let's see, like, how would that work? I mean, would the DAO be doing that prior to vesting that in the mechanism in the stream, or
yeah, and then because I think that if it goes into the stream, right? So let's say that winds up being 100 Fox that now goes into the stream that releases in 18 months. Well, in 18 months, that 100 Foxy is going to be more than 100 because it's going to rebase, right? So
which
I think
makes
that's
the terms even better. Yeah.
That I think that's the idea, is that you get the Foxy gets locked up and it then compounds on itself while you're waiting for it to unlock, rather than it just being Fox. I'm pretty sure that's the way it would work. I mean, Ocean's here; he might know more accurately.
Yeah, conceptually, it's a cool idea. It does make the whole process a little bit more complex, but it could be doable.
Yeah. Ocean, is that how it would work, the way I described it, as far as you know?
Yeah. Can you guys hear me okay? Sorry, I'm outside. I don't know if it's too windy or not.
I can hear you.
Cool. Yeah, we could definitely do that. I think there's a couple potential technical complications, but they can definitely be overcome. The first of which is Sablier would need to support the rebasing token, which last time I looked at their contracts, I don't believe they do. There's a couple possible solutions there that I think we could resolve that in a not too crazy fashion, either by forking them, wrapping Foxy, or I know Hedgie's also looking at something similar that would allow rebasing too. So I think it's super cool because then we're incentivizing these people that are locking tokens even more, and I think it makes a lot of sense. And that Fox is then also providing liquidity through Tokamak, so it's like a win for contributors, a win for the DAO. Like it kind of connected to everyone.
Hedgewood's here. Hedgewood, do you know if Hedgie would support rebasing tokens?
Before Hedgewood jumps up, if he's able to jump up, I would just, and not to dissuade any of the comments or the prospects that we might have, obviously, in discussing these options, but I would say it is kind of it's kind of difficult to be able to say that during the current economic climate and times of uncertainty, inflation, and other things that are happening, for us to place our expectations on basically put our bets on 18 months of deferment of people that have basically no idea where incomes will be in a couple weeks, let alone 18 months or even 6 months. I think that while it's a viable conversation and it's a good to keep our options open, I think that we have to be a little bit careful about basically leading the conversation with this and saying that it makes the most sense that people are able to defer their incomes for 18 months, a year, 6 months. while it's possible, it is a possibility for some, obviously. Crypto is usually a disposable income for a lot of people, and it's something that you should never invest in unless you expect to you lose all
Yeah.
your.
Hey, Nevros, I just want to make sure you know this is all opt in, right? Every
Yeah,
option here would be given to people to choose if they wanted or not.
I understand. No, I understand that definitely, Josh. I understand the opt-in process, but one other thing that has to be said, that while opt-in is a very easy thing to say, a lot of times there are pressures from that. If you see a majority of the work stream, or the leaders of the work stream, being able to opt in and defer those payments, and then we hear discussions of the possibilities of having to make tightening the belt a little bit more and making changes and concessions and stuff like that. That's a fearful thing for people that might not be willing to just say, hey, I can just take that chance. While like I said, it's a viable conversation, we should definitely keep our options open. I think that realizing the real world pressures of contributing might not have the disposable income that we would all believe that everyone in crypto should have, is a reality, and we do have to pay attention to that as well as a DAO and a community.
Yeah. Okay. Thanks, Nevros. Hedgewood. So, what do you think about hedging?
Yeah. Can you hear me okay?
Yeah.
Yeah.
I kind of like Oshin was saying, long term, we want to be able to support rebasing. So we will at some point, but it does sound like this kind of is a priority to get moving ASAP with just cutting costs. So we would have to basically just support a wrapped version, which I think Oshin probably knows better than I do. But Alex was looking at it, or my co-founder was looking at it this week. And it's been done before with rebate tokens. It's kind of like a standard practice in handling them. So there is a path forward. So if it's something you'd want to explore, we could put the bandwidth to making it happen for sure.
All right, good to know, man. And since you're up here, could you just briefly explain? I believe you touched on this a week or two ago as well, but if you could just briefly explain, if the DAO, can you hear me?
If you guys, yeah, sure.
Hey, Hedgewood, we're having a problem with your audio now. It's
Used with Sabler or let me jump on.
yeah. You need to do something different. We can't
Sorry
really
about
tell we can't really tell what you're saying.
Sorry.
Firebomb makes a good point about fees. On Foxy, it's mainnet unless at some point we peg it over, and of course then we're dealing with mainnet fees, ERC20 fees. Depending on how often you're doing that, it's not a big deal. But for sure, we're talking about doing this on Gnosis chain in general, so that is an important consideration. By saying for sure, I meant if it was just Foxy or Fox and not Foxy. So good call on that one. We need to be mindful of that stuff, because those fees could potentially make the whole thing less attractive.
Yeah, it sounds like, I think kind of where this is going is that we're hoping to. So I'm going to be putting together a proposal onto the forum, right, for the initial forum post discussion to formalize a possible suggestion about this, and then we would really like that to be able to be done for the June payroll. So I can pretty much tell you that we're not going to be able to support Foxy then, but it should be something that we work on with Hedgie or Sabely or someone to be able to do that and be able to offer that option as soon as we can.
Yeah, maybe like a phase 2, because conceptually it sounds very cool.
Yeah.
Headshot, looks like maybe you've sorted out your audio. or perhaps not yet. Just let us know whenever maybe you got a good connection. So yeah, in a way, time is of the essence. Sort of, in terms of like we'd like the DAO to start realizing these USD savings as soon as possible, and that would be for June payroll, which will be coming up in a matter of weeks here. So yeah, like Josh mentioned, we could get a proposal out. We're thinking initially the proposal will be, of course, it's just a draft proposal, so we can kind of just lay out the general terms and what we're thinking, and then as we sort of scope this out more and figure out the mechanics of how it'll all work, that can be in the actual ideation proposal. Willie had a cool idea of using maybe leveraging our success tokens. You guys may have might remember that. We had that sale to Coinbase and some others. We still have success tokens. This is a very long-term play. They expire in 2024. So these would be for people that really are okay with the longer-term lockup. But that's an interesting option as well. Beard, great question. Let's see, I'm trying to recall my math from last week, but I believe with a 25% reduction in USDC, our runway as of last week would have been extended 3 months. So, if we reduced our USD spend by 25% via these means alone, then yeah, we're extending it by another quarter, essentially, which would, that's good. And again, that's just one tool we can use to improve our runway. So that's that's kind of the big challenge right here is we want to get that perfect balance of like, okay, what are the terms that will allow the DAO to have these cost savings, but also that people want to opt into. And it's tricky. Like all things considered equal, the more Fox the contributors take, the better. And that's also a great signal that, hey, people are bullish on the DAO. But of course, we have to make this a win-win for everybody. Foxenomics with his horde of success tokens. Thank you for purchasing those. I think if ShapeShift works out, and I think it will, those success tokens are going to pay off quite nicely. So yeah, I think we'll see if Hedgehood is able to make it back up. I'm curious to hear more about doing that on Hedgie. One other thing I wanted to touch on here, and as long as we have Josh up on stage, is our One Fox and Angel Vault wind down. So you guys may have seen in the announcements thread, and we'll make this more visible too in the next few days. But essentially, the DAO is winding down its positions in Angel Vault and winding and moving out of One Fox. This is something that started, in November. It actually was kind of the last thing that happened before the tokenomics workstream was officially created. So it kind of marks the end of this. I'm personally super in favor of this. I feel like it just doesn't make sense in this bear market. Arguably, Angel Vault has added to some price support, to Fox over the past few months. That's hard to measure and quantify. Certainly, a worthwhile thing, but I'm really happy that we're moving out of this. Also, I think we learned a very, very valuable lesson from Ichi, and this is one thing that I've always stood for, or I should say stood against since the beginning of us creating this work stream, is we at the DAO will never sacrifice the long-term viability of the DAO for some short-term price appreciation. And Ichi, through its use of Rari pools and its own Angel Vault, they really decided to goose the price. I imagine this was a conscious, deliberate decision on their part. And I'm not going to cast judgment on that. They're their own project. They're kind of doing their own experiment. But this will be something. I mean, as long as I'm the leader of this work team, we will never touch anything like that. That is not how we roll here. It's all about the long term. And if we add value to the product and the platform, the price will appreciate over time. We just have to survive this fucking bear market. So yeah, Headshot, if you don't mind just waiting, Josh was going to provide kind of a more granular update about this one Fox thing, and then maybe we could hear more about the hedging stuff.
Yeah, and Kent posted an update in announcements. So basically, the deal with the one Fox was that back when we first created it, you could mint a one Fox with 80% value of USDC and 20% value of Fox. And it was always, every one Fox was always redeemable for one USDC. So to be able to make up for if 101 Fox was printed on Monday and then 101 Fox was redeemed on Tuesday, then you'd be basically 20% of the value of that one Fox would turn from Fox into USDC to the users in one day, and it was up to the treasury, to the DAO treasury. We had a separate one Fox treasury that was tied to the DAO treasury that would have to basically pay out that USDC, and for all intents and purposes, we essentially bought Fox from the people who minted and then redeemed one day later. Now, the plan was that this would be long-term holders of one Fox, right? And it could become its own stable coin. In down markets, with people being concerned about liquidity and there being enough collateral behind these different stable coins, people were redeeming their one Fox for USDC. And so we realized that was what the DAO was doing, is we were kind of in the game of buying Fox when that was happening. So to limit our exposure, we raised the minting ratio, and ultimately right now, to mint one Fox, you have to use, actually it might be totally deactivated at this point, but we made it so you had to use 100% USDC to be able to buy one Fox. So there's basically no Fox exposure for the DAO when one Fox gets minted. And then we just want to wind it all down. We want all the one Fox out there to get redeemed for USDC and be done with it at this point. So there's instructions. If you hold one Fox, if you used one Fox and you're in one of the Angel Vault LP positions, please check the announcements channel for we hope they're clear instructions on how you can get out of those positions and get your USDC redeemed. Get your one Fox redeemed, and you're going to get it redeemed for USDC. We're also asking if there's anybody out there who's willing to redeem that one Fox for the value of Fox at a discount. It will help the DAO treasury, because essentially the DAO is going to buy all this one Fox back. And so we do know there's a few that are willing to do that, which is really great. If anyone else is willing to do that, we will be setting up the liquidity pools so that you can redeem for USDC or Fox. So just stay on the lookout in the announcements channel for that. That was a lot of information.
Yeah, it's all spelled out in the announcements channel. Thanks for the summary, Josh. Appreciate that. And kind of just more broadly speaking, I think it's a bit of a cautionary tale here, and it's a good reminder of us to always, when we're entering an initiative like this, really think through all the potential scenarios. And I don't know if we really fully considered what would one Fox and Angel Vault look like in the event of a protracted bear market moving forward as we enter other put Fox into different applications. I think we always need to be thinking of through the impact. Anytime the DAO's hand is forced and we have to do something, that's usually not a great place to be in. Of course, this can happen with loans or things like this, and always thinking about risk management and where the pitfalls and landmines might lie. So yeah, we can cover this more next week too. Definitely look at the messaging and announcements. If you have any other questions, just jump into the public tokenomics channel. We can give you some more nuance on that if you have questions. And yeah, Headshot, thanks for waiting on that. And sort of going back to the hedgy for time locked payments of Fox thing.
Check. Does this actually work now? Can you hear me okay?
Mic check, 1, 2, 3.
Check 1, 2, 3. Can
Yes,
you not?
I think we got you this time.
Oh my gosh. Okay.
We can hear you. Yeah, we're good.
A nightmare. So just to kind of run through like a high level, I just shared an article in the chat, and this is something we had done with DAO House, where it was actually Spencer from DAO House. It was his idea, and it was basically just using these NFTs that can lock tokens in a new way, which, as DAO House did, they basically sent out their monthly payroll, just a portion. It's very similar to what you all want to do, where they pay a portion in stable coins, and then each person can pick an amount of locked house that they want that had a certain bonus. In their case, I think it was all locked for like a year, but I think that's flexible. And basically, Spencer just uploaded a CSV file into like a very simple smart contract that we have the interface going live for in the next week. That was let them, send out locked tokens to their 17, core contributors for payroll pretty easily. And every person, as you can see in the article, who got one of these, basically it's you have your tokens, but they are locked. You basically, the NFT is your right to the tokens. I think the only difference, and again, I don't care if you go with Sabler or this, or if it's a mix or whatever, but the one difference between them is you could, hypothetically exit your position of these locked tokens over that year just by selling the NFT. So if things change and someone has this, you're able to sell the right to your locked tokens without actually like moving the tokens on markets or just being stuck with the tokens in your bag. So that was one interesting thing. I don't know if that's a positive or what, but happy to dive in more.
Yeah, that's an interesting contrast to Sabler, where there would never be effectively like a secondary market for these things, for these streams. So that's an interesting thing to consider. Like, I think maybe to the user, potentially that could be more appealing to have that option. It's always good to give contributors more options. I like the elegance of having just the NFTs. The visual element is cool, but it really, I think that the important way to think about this is specifically the NFT is what is facilitating the time lock. Is that correct?
Yeah, totally. I mean, we're not like an NFT company by background. Yeah. We used NFTs specifically, just like with OTC, just because they're a very cool mechanism in that they allow you to have a unique access key, almost like a vault that has one key, which is an NFT, that you can also transfer ownership of. So like NFTs as a technology are very freaking cool. I think the visual thing is something that's like still being explored, like how we think that exists. But at a core, it's like it basically lets you lock tokens in a safety deposit box, mint a key for you, and then you can either hold that key and unlock the tokens or sell the key to somebody. If you think about it paired with concepts like a 30% bonus or whatever bonus, if you sell that NFT at a discount, you're essentially able to almost sell it at like market. There's a lot of interesting things you can do when you think of like a bonus that's locked for a year and what the value is on day one and 6 months out, 3 months out, whatever.
It's also interesting what you were talking about with DAO House, just being able to upload a spreadsheet. So one of the things we've been pondering is like logistically, how would this work? So essentially it would be like, okay, maybe there's 3 options or 4 options that contributors can choose from. They make their selection, and then we would basically send you a spreadsheet of the related addresses and what choice they went with. And it's for at least for that particular month, and it's that simple.
Yeah, I mean, to be honest with you, Spencer, what he did for Dow House was he did just direct smart contract interactions, which took like 2 minutes. It was just I could show this to you, but they do a lot of their execution via like a snapshot or their version of like the snapshot. So for them, it was just like an automatic execution. They just basically upload it into it's like a batch mint function that talks to our NFT protocol. It's very simple. So whether you all do it, we don't have to like, touch any funds or anything. I could just give you like the copy paste thing to do. And I'm sure like with the team you have, you could do it. It's very simple.
Awesome. Yeah, this is. Sorry, what was that?
So just happy to help in whatever way, like as always, if there's a different approach.
Yeah. Yeah, I feel like this could definitely be a good solution here. Josh, did you have any thoughts or questions about this approach?
No, I think that we need to look at this and compare it to just do a pros and cons to Sablier, but I think it's definitely a possibility, and part of that is also going to be like difficulty to set up. It's that every workstream leader is going to have to create however many of these every month for each employee that is going to take a split. So curious to compare and see that kind of overhead that it's going to add. That'll be another important factor.
Totally. And I'll say like this was for 17 people. And so like, if this isn't the right thing, I think I just thought of this because I was listening to one of the conversations we were talking about OTC, and we just so happened to do this for somebody. So it's not a right fit. No skin off our back. But if it's something that is cool and provides like a unique value, just happy with whatever, and happy to answer any questions if you want to actually dive into the like technicals of like, okay, we have to pay like, X amount of people every month. What does that actually look like from like?
Yeah, I mean, I think actually maybe you could even I don't know, maybe we could just plan for it next week. Could you give a demo of what it's like to set one of these up and create an NFT and just show us the whole thing? That would be a good thing to have happen on this call next week.
Yeah, sure. I can ask some questions offline or off this call.
Sure.
See what your actual like setup is, so you could see what it actually feels like if you're doing it through Gnosis Safe, everything like that. But I
guess that's the question too. Where are we doing it from? That means we're not doing this from Colony. So,
I'd love to actually know what you are doing, because we're always trying to build into things. So I'll ask all these questions as a follow-up, maybe.
Well. Okay, sounds good. Thanks, man.
Yeah. Thanks for having me up. I'll jump off.
Hey, thanks, Headshot. Appreciate it.
You got it. Thank you. Good hearing you, Ken.
Foxenomics in the chat says contributors want to be paid in USDC only. There should be a way for members to effectively pay them and get their time lock. So I want to make sure I'm fully grokking this Foxenomics, but isn't this a risky approach for the DAO? Because if we're offering, say, an extra 30% USDC over a certain time period and having to maybe stream that or locking up, well, one, if we're locking it up, then we're not realizing any cost savings. Two, if there's a promise to give the contributor, XYZ down the road, that's a liability moving forward. If I'm reading this right, so pardon me if I'm not grokking what you're saying here. And thanks everybody for pitching in ideas and being in the chat and being active. You guys really help make these weekly sessions fun and productive. Okay, so you're saying the Fox and not the USDC. Interesting. So yeah, I think this is like this really kind of touches on an important point. Like, that nothing is locked in stone right now, and we have a lot of options in front of us. So yeah, I think it's good to think outside the box and really, consider the different ways this might work. Being able to buy somebody's time lock via the NFT is super interesting. It can impact a lot of the economics of it. So effectively a 30% bond. Cool. Yeah, I think we can really think through this a little bit. As you guys chat about that a little bit more, one other thing I just wanted to touch on here, the final point on the agenda, was in terms of options. So this was something John had raised as a possibility a few weeks ago. And it's all, generally in like a shitty market, it's always something you think about. Traditionally in TradFi is like, well, maybe you can hedge with options. The tricky thing in crypto, there are centralized options on things like ETH and BTC. I've had those for a while, but decentralized options is a newer field. The tricky thing right now, after digging into some of these, is essentially there's two problems. There's a lack of liquidity, which gives rise to a lack of sufficient risk reward. In other words, to adequately hedge, let's say another 20% pullback in ETH, which would almost certainly lead to another, pullback of at least 20% in Fox or something of that order. We would have to be spending a relatively high amount of money for those option premiums, or premiums are essentially how much an option costs. So if we're spending a big chunk of our monthly budget on these things, maybe we make a certain amount if the market continues to drop. But in a sideways market, we're just throwing that money away. And of course, our stable coins are precious in this environment. We don't want to be throwing them away. And if the market goes up, that's great. We're not, maybe it's bearish that particular week or month, but again, we're eating away at our stable stack. We have to do this. Of course, we have to spend money in order to get that price protection. However, there has to be a sufficient risk reward. And looking at these platforms, there's some problems. Hedgic, I think, is the one most likely to maybe offer a sufficient risk reward in the near term. So keep an eye on that one. DopeX has been around for a while, but they're a little bit clunky in terms of having these different phases or periods where expiries happen. They also don't have longer term expiries. And then Lyra is another one that I was looking at that I believe Professor McCarthy mentioned. This one is on Optimism, which is a new scaling technology on Ethereum. I think a lot of things are going to get built on Optimism. It's one of the big ones. However, again, there's just there aren't too many expiry solutions or options there, and then just a general lack of liquidity. But I feel like that's going to change. Also, Lyra has a super sexy interface that they pretty much stole from Robinhood, and Robinhood has a pretty good simple interface. So that's something we can keep an eye on moving forward. It would be good. Like in my mind, it would be really nice to have a situation where if the market crashed another 20%, maybe we're earning at least, half of our monthly budget, if not our whole monthly budget on that option. So as things get worse, at least we're protected, but it has to work out from a risk reward perspective. GM Stewart, sell covered calls instead of purchasing puts. So yeah, that's, I think one of these options platforms had the option of actually selling calls. But again, like liquidity is the issue. I'm not actually as familiar. I have traded options before personally, but I'm not as familiar with managing risk in terms of selling calls as opposed to just buying puts. I'm sure some of these people here have that experience. But that is something worth looking into. So Lyra has that. Okay. Hypothetically, if it did all make sense and we could easily gauge our risk reward, that might be an option worth doing. Yeah, DGen perp futures, if you want crazy leverage and See what happens. But I think this is like another good reminder is like we're pretty early in all this, especially with these decentralized options. Yeah, covered calls. So okay, you have limited risk. But yeah, so DeFi Cafe, this is the one thing I was thinking about. So if you're selling calls, if things go against you, do you not have
Probably easy to do it this way, isn't it?
Yeah. Hey, welcome to the stage.
Yeah. Thank you. Were you talking about buying puts?
GM Stewart was talking about, well, okay, so I was talking about just the very naive, straightforward approach of just buying some puts. But alternatively, you could sell covered calls. I believe the fact that they're covered does limit your risk. I think uncovered calls, that's the super crazy risky strategy.
Correct. Yeah. If the underlying rips past the strike price, you're exposed to essentially unlimited downside.
Yeah.
That's kind of what StakeDAO does with like a covered call. So like they collect the premium, but then it limits the downside basically.
Interesting. So the strategy could be effective, assuming that there's we could find a platform with sufficient liquidity. You said StakeDAO. Are you saying they're using covered calls, or they provide covered calls?
They offer covered calls as like one of their strategies.
Oh, cool.
So worth having a look into it there. Plus, I'm sure that we could get someone from their community. I mean, maybe not given they're a competitor, but someone with a more fundamental understanding of options pricing.
Yeah. And I think even on the TMDC, we have a couple options rock stars. So yeah, per that point, Hedgehood, yeah, I think this is something we can dig into. Fox McCloud says cover call is selling upside after a certain point. For giving up that potential return, you get the premium. Same on the downside. Putt tickets. Isn't crypto just a bunch of putt tickets at the end and a bunch of like arcade coins basically, and arcade tickets? Yeah, that's what Warren Buffett would say. So LPX, just to clarify one thing here. So I agree, options are way too complicated for most contributors. I mean, some of these complex option strategies, even for a seasoned trader, might be a lot to get their head around if they're just used to buying and selling puts and calls in a straightforward way. But to clarify, the purpose of this is something that contributors would never touch or have to worry about. It's strictly it's a strategy that the DAO can employ to hedge the risk of more market downside. So contributors don't have to really be familiar with what's happening on that side of things. It would be interesting to have an educational boot camp about options with our traders. But thanks for those insights, guys, on the selling of calls. There's also strategies, and this is actually one cool thing about Hedgic is there's things called straddles and strangles where you can position yourself potentially to profit in sideways environments, or maybe you do make more on the downside, but maybe you the risk reward changes a little bit. Maybe you can actually make some money if it goes sideways or down, and these are more advanced. I like the idea of keeping it simple. But if we have the necessary options, trading experience, and expertise to really accurately assess risk reward, then in the work stream, then rock on. So yeah, there's lots to kind of chew on here. I think the number one thing we can do in the near term that we actually have control of is coming up with these Fox incentives. So basically that's going to be the main focus. I think we can definitely get this set up in time for June payroll and start realizing those cost savings. The TMDC trading arm, man, yeah, the DAO hedge fund. I personally day traded a long time ago, and it almost like I don't know, man. It put me in a bad place. Like this is back pre crypto with just stocks, but made some money, lost some money, and it got me really stressed out. But if we have the necessary people on staff who can like, or as part of the work stream who can navigate these things, then rock on. Yeah, building a model and figuring out what to do. So yeah, I think if you guys have ideas, seriously, just jump in tokenomics or jump in the treasury calls we have. The sky's the limit in terms of what we can do. If it makes sense financially and there's sufficient liquidity, then right on. Yeah, day trading was pretty brutal. I remember one time, like on the upside, like one time the Fed cut rates unexpectedly, and I was looking at the S&P futures, and I just see these massive green candles starting, and I accurately sort of assessed that, like even though they hadn't formally made the announcement in the media yet, the word was getting out. But I figured, oh my God, that's probably what happened. So I YOLO'd into some S&P calls, and I made a good amount of money like very quickly, and I was like, oh, this is amazing. And then on the flip side, I lost money very quickly on other occasions, and I realized that day trading is certainly not for me. So if any of you guys are, then right on. I respect your ability to be nimble and take on that risk. I personally like to just buy and hold this crypto stuff over the months and years, and it's less stressful. So we've got 5 minutes left. Anybody have any parting thoughts or anything else they wanted to bring up before we wrap up? Cool. Well, thanks everybody for chiming in today. Thank you, Josh, for joining us from the conference and giving us and adding some color to all this, and also helping out with all the One Fox stuff. We'll keep pushing all this stuff forward, and yeah, thanks as always, guys, for the feedback and thoughts and questions and more ideas. We're all in this together. This is not the sort of thing of like. A few people are deciding what to do and you're just along for the ride. Like that's old school. That's very corporate. Fuck that. Like we're all in this together. We're coming up with ways to deal with this together. And that's the way we do it in the DAO. So thanks for being on this journey with us. Yeah, everybody have a awesome week. Starting to get very a little bit summery here. And have a good one. Take care.